Good morning, everyone, and welcome to the European crossover webinar. And boy, did we see some pretty volatile action come up right after I don't know if you call it the Asian Open. It was a little bit earlier even than that, but we did see that volatility, certainly big moves in the dollar yen, in the yen itself, even the Aussie yen itself, and also in the Australian dollar. We're going to get to those quickly. To cover that because it was being deemed a flash crash. So we'll get quickly into that and then we'll go right into the analysis. And it says Australian dollar left bloody after computer-driven crash. Australian dollar was picking up the pieces on Thursday after a torrent of automated selling against the yen sent it plunging to multi-year lows on a host of major currencies. The Aussie suffered some of the largest intraday falls in its history amid a drought of liquidity and a cascade of computerized sales. At one point, it was down 5% on the yen, almost 4% on the dollar, before it climbed back much of the losses as trading calm and humans took charge. Violent moves in the Aussie and the yen this morning bear all the hallmarks of a flash crash, similar to that which befell the New Zealand dollar in August of 2015 and the sterling in 2016, said Ray Trill, head of FX strategy at National Australia. The fact that over half the move down in both pairs have been since retraced is testimony to today's move being first and foremost a liquidity event. One theory was that Japanese investors who had been crowded into trades borrowing yen to buy high-yielding currencies were forced out en masse when major chart levels cracked. The Aussie tumbled as low as 72.26 Aussie yen. Reuters dealing, a level not seen since late 2011, has started around 75.21. When the smoke cleared, buyers returned and it was last changing hands at 74.40 yen. The selling spilled into other crosses and the Aussie sank to the deep at 67.15. And remember, we were talking about 70 cents. I said, there's a good chance. We talked about that yesterday, that will go below 70. I think we could close the week below, and then we might see a nice reversal. And I said, if we should get a sustained move, below 70, next target is 68.36. Holy smokes, it went past the 68.36 without any trouble. So we'll focus on that. We'll probably look at some of these crosses too. The selling spilled over into other crosses, and the Aussie sank to as low as 67.15 Aussie, the lowest since March of 2016. And remember, when we looked on the charts on the weekly, we said that if we get that sustained move below 70, the target was, we did it with our analysis, the target was 68.36. Wow, we went all the way right through into the 67 handle yesterday. The New Zealand dollar also took an initial beating on the New Zealand yen to hit its lowest since late 2012. And let's go on and move here. Yen soars after flash crash in China worries. The yen rocketed higher on Thursday as it poised for its biggest daily rise in 20 months, and as growing concerns about the health of the global economy, particularly China, sent investors scurrying into the safe haven of the Japanese currency. The yen surged across the board, reserving some of its biggest gains of the traditionally high-yielding currencies, favored by domestic retail investors such as the Australian dollar and the Turkish lira. The break of some key technical levels in early Asian trading on Thursday triggered some massive stop-loss sales, forcing investors to unwind some of their largest short yen trades against the dollar and quickly cascading into other currencies. The dollar collapsed to as low as 104.10 yen. Wow. An eye-watering drop of 4.4% from the opening level of 887 and the lowest reading since March of 2018. It was last trading around 107.54 yen, down 1.2% on the day, and poised for the biggest daily fall since November 2016. At sessions lows, it had fallen more than 6.5% in the last 5 trading sessions. While the early slide was triggered by news of a rare cut in sales forecast by Apple in its latest quarter, citing slowing iPhone sales in China, the selling quickly gathered momentum in the liquid markets, with the Japanese still on a holiday after the New Year's Day. The sharp drop in risk sentiment fueled by weaker PMI data in China and Europe and Apple's warning has contributed to the sharp overnight move in the yen, said Valentin Mironov, head of G10 FX at Credit Agricole. The yen surge against the dollar also pushed it higher against other major rivals, such as the pound and the euro, against which it rose 1.8 and 0.9% respectively. Market watchers say the yen surge may have further room as Japanese investors have made a beeline for the overseas assets, particularly U.S. equities in recent months on an unhedged basis, and the yen would rise to force them to cover some of these short positions. This is one of the key things over the last, I'd say almost 2 years, was this idea of, the unhedged positions. And some of the reasons why, on some of these moves, we weren't getting, I guess, like I said, this started by almost 18 months, maybe almost 2 years ago, where when people were coming into these positions, they were doing it unhedged. And I thought it seemed like we were getting, and this is further back, but the whole story about the unhedged position where you see them move into it and you see, okay, we'll see a counterbalance move. You just weren't seeing that. And I guess in some ways, has finally, the roosters have come home to roost. Why we saw this extended move, because those were unhedged positions. Nothing that I had thought about, but I know that over the last, starting about 18 months to maybe almost another 6 or 7 months, even beyond that, or maybe 9 months, where you would see some of these positions and they're unhedged, and there was no like a counterplay against that. So I guess, like I said, that some of these positions, I guess, hung on for a long time, and why we're able to hit some of these levels. That's the only thing I can, which it mentions here makes me think about. I remember that where we just weren't seeing this nice counterbalance on some of these extended moves. Lastly, gold hits over 6-month high on growth fears. This is that position, remember, we were just talking about yesterday, 1292 in the gold. Remember, we talked about 1287 being the 61%, but on the XAU, we were referencing here, and I'll show you here. There we go, right to the tick, 1292. Remember, we had that. I said that we wouldn't get a pullback until we got to 1290. Okay, it's 1293. So actually right here, 1293, it looks like it hit it right to the tick, 1292.669. Okay, but we were talking about this level. Now we had 1287, but I said I didn't think we would pull this over here. But I didn't think we would see the move start to pare back until we got to 1293. But what I was saying was, I think that come NFP day, we do have the opportunity to get past 1300. From here, this 1293, I would expect a little bit of a pause here. But I don't know how much more of a pause because tomorrow's NFP day. But I think that the door's open for us to pop up above 1300. Apologies. But spot gold touched its highest level, 1292.32 per ounce. The gold futures were up 0.6 at 1291. The weaker dollar lent some support for gold. People are more interested in gold as stock markets are under pressure and are looking for gold as a safe haven, said Peter Fung. Dollar index fell over 0.2. Soft dollar moves make the greenback denominated bullion cheaper for investors and holding other currencies. Adding to other investors' concerns, a meeting between U.S. congressional leaders and President Donald Trump on Wednesday saw no sign of an agreement to end a partial government shutdown. Business in Britain's dominant services sector reported the slowest sales growth in 2 years during the 3 months of 2018. Markets will be looking for its cues about the interest rate hikes from a joint discussion from the Federal Reserve Chairman Powell and former Fed chairs Janet Yellen and Bren Bernanke on Friday. Boy, I bet old Trump misses Janet now. Meanwhile, the Australian dollar dominated gold as it hit a record high on Thursday at 18.94 on the currency odd, often a gauge of global risk appetite. Yeah, that was that thought that when the Aussie weakened, it really gave gold that extra little boost to pop up a little bit higher. Australian producers were slow to realize the move, but have since been consistently selling and taking advantage of the very bullish move. Investor appetite for gold has reflected in the rise of the Spider Gold Trust, the world's largest gold-backed exchange, rose about 1% to 7.9531 tons. So let's go on and get quickly into, well, actually, before we're going to jump right into the charts, but let's take a look where we stand as far as news. Eco news coming up. Let's see, in about another 20 minutes, we'll have UK construction here. But coming into today into the States, we have challenger layoffs, okay? And then obviously we have building permits, but we're also going to have ADP. Now, they had 179 last month. They're looking for 178, okay? And let's push back a little bit because of the holiday. And jobless claims are going to be out. Now, obviously, tomorrow's the big NFP day. We do have napalm today. And let's see, construction spending at 10 a.m. Eastern. And that's going to be about it. Let's move this out of the way. Obviously, the big mover was the yen. We're going to quickly get into the dollar yen. This was some kind of a move. We had talked about that 875, and we saw, actually we saw a nice 50 pip rally off of this yesterday. Remember when we came on the webinar, we were actually trading there at 875. We were talking about that being a level there, and we saw a nice recovery. I think it made it up to what I think it was 929. So a nice recovery, and then we dipped back below. We came back above it a little bit later in the morning. I think we came back above 109 just a little bit before he started sliding, and then all of a sudden, all heck broke loose. But we were talking about those, once again, those unhedged positions. I'm referring to back then when it was with the euro, and we'd get these extended moves, and they were saying, they're just going unhedged. But I guess I never heard it lasted for about a few months, and I didn't hear a peep about it, I guess, until now. But that being said, what a heck of a move that we fell back in here. Remember this old level, it was 464 right there. So we made quite the drop here. Let's go and move in here. Next key level here, and we're looking at the daily, is right here, 776. Do we go right there? We're just a bit below that. Hang on. Five minutes still in a buy mode, but we have run into a little bit of resistance here now. That's 776. Let's take a look here. And we're looking here on the 2-hour chart. Some resistance right in here. So we're going to actually go right there, 780. 780 for resistance on the dollar yen for now. Boy, what a far cry from here. With support, On a short-term basis, comes in right there at 712 on a short-term basis, 712. And if that 108 holds, $720 would be the 23%, and we've got 712 right there. With that move, pretty much everything got thrown out the window. Even Euro took a little bit of a tumble too. I actually still have a long position. I actually had added on the way down at 1380 was a 2, and also at 1352. I was able to get out of that. I mentioned that in the chat room too, but I'm still stuck with the position above here too. But right here at this 38%. But the only thing that was a bit of a saving grace was I didn't want to get out of the position until after NFP. And my point is, I think that it's not till we get past NFP, and I think that the dollar will still weaken. But I tell you what, I sure am glad we didn't crack below this 113, or I would have got my rear end stopped out, and wasn't too happy. But boy, what a change! I mean, from these highs that we had, even as we paired back initially as we came into the Asian analysis from the new year. My thought was support would come in at 1402, but we finished up we opened so strong as we moved higher that we had put our intraday support, I think it was 1412 or 1414, and so even there, I thought the 1402 looked like a great little deal there. But wow, look at that! Look at the fall that we had. But I'm certainly glad that we didn't get the type of violent reaction that we would have got. And actually, the key thing is we got above 1342. Remember, that was our key. If we look on here on our bias chart support. Well, I we didn't mark it right here because it was so much slower. But 1342, I think we had that on our Asian analysis, was going to be a key daily support. That seemed like so far away early yesterday morning that I didn't even note it here. But it was good news to see it above 1342. And I go, okay, great. Now we can start working higher. And then we get, flim-flammed here on that opening. So I'm glad that the euro didn't take out 113. I think we'll still push higher. I think the dollar, we're going to see what's happening. I'm going to hang on the initial position, but I jumped in at 82 and at 52, so I was able to get out, take a 2-pip loss from the 82, but make up 28 pips on the one from 52. Like I said, wasn't a very good trade. Well, it wasn't so bad. It's just I think we just got overdone. And one of the things I was noting was that we weren't hitting like real hard stops. It was just kind of like a constant drip, drip, drip. But I still think that the dollar will pair back. We'll see what kind of direction we get once we get past NFP. Could see a dramatic reversal. If you think about it on the charts, if we were to finish the week out, we come up here like around 1440 or something like that. It'll be a pretty interesting looking chart, really across the board, and maybe we will finally start to get into some of these volatile moves that we're hoping for the new year. Well, for right now, resistance is going to be, we're going to give it some extra room, okay? We'll give it some extra room in case we do see a little bit more follow through. Let me say that. So we're going to go with 1405 for today's resistance and the euro. We have flipped back now to a buy mode in the 30-minute. Obviously, we got this here. Go back in here on the 5-minute. Quickly saw this change back in here. And let's go and move into the cable. Here's that daily we were talking about right there. So it actually climbed back above there yesterday, just above there, only to get all rattled with the yen move. And we've come back quite a bit here in the cable, but boy, this was a surprise here. When we got this move above 127, it looks like we're able to eventually start to move higher, potentially hit a few little stops on a follow through, and then we just start really falling back. And the dollar, we saw that dollar continue to move higher and higher and higher. So a pretty good move. Look at the shank down here. In cable before we're in a nice little bit of a recovery here. So obviously, unbelievable some of these moves that we saw. But anyway, let's go on and move into the 2-hour chart. We've already had a pretty unbelievable move here. If you look at it right now, resistance on the short-term basis is going to be right here, 25.86. 25.86. We're not even that far away from it right now. Support for now on a short-term basis, I think we have to give it that room, is going to be right there at 25.15. 25.15. This is unbelievable here in the Aussie. The snapback all the way. One of the things that we looked at, and we've done that on the Asian analysis, and Blake had mentioned the same level here, the 70.27, 70.25. And we look here, let's go and take a look at it on the weekly. Now, here's what we were referencing here, the 68.36. So if we got a sustained close below 70 cents, we're going to go for the 68.36. Well, we got below that. We even went into a 67 handle all in yesterday. But boy, what a recovery here in the Aussie dollar. Well, resistance here is going to come in at 69.84. Well, it caught 69.85. You can see it right here. It's unbelievable the smooth has come back. But it'll be 69.85. With support coming in right there at 69.33. Right there. Let's call it 69.34. Right there. Now we'll move into the Kiwi. Kiwi certainly fared better than the Aussie. And we're looking here on the support here on the Kiwi, 66.84. Certainly dipped below that. And you can see right there, support's going to come here right there, 66.26. Yeah, right there at 65, 66.52. It's not that far away. Let's move that just a hair higher right there at 66.58. There we go. I don't think there's been that much interest in the Kiwi itself or against the dollar. And we'll move into the dollar CAD. Crude oil still trying to find a little bit of a bottom here. We had a resistance yesterday at 36.44. That's pretty much kept this market in check for now, but we knew that with NFP coming up, Canadian employment also, there's a potential that we could rip all the way up to 37.15. But for right now, this 36.44 is keeping the market in check for now. This is 36.46. So that will go on and remain as far as our resistance at 36.44 here.
Webinar online.
I think we want to keep this, and that's key. Remember on a daily, the 35.69. In a very tight range, but just up and down like a yo-yo. And let's go move into the dollar yen, which we already did take a look at the dollar yen, but we'll go back. Looking this on a weekly, we've essentially retraced the entire move all the way back. Resistance, as we're noting here, we have it at 780. We're just right there. You can see this coming across right here. We look on a daily, it stands out a little bit better. See right there, that daily close. Because it's very interesting with this. We've done so much technical damage, and wow, you get a move like this, I don't think anyone's looking to come back. But I will say in the short term, we're probably going to see some pretty good volatility in the dollar yen, depending on how the NFP comes out. That may allow us to push up a little bit higher in the dollar yen. It may allow us to get to about, maybe right in here, this 837, 838. And then we'll probably see this market push back lower again to test. But for today, it's going to be 780 for resistance. And support we got at 712. With the volatility and the moves that we saw, I think this is going to be one hot pair when it comes to some of these moves over the next week or so. Yeah, right there, you see? Coming in right there. It's 713. We've got 712, and then I think it's 719. Well, we'll take a look at it right now, but if this holds here, then you can see here that 720 is at 23%. And we've got 712. Let's go and take a look now at the cash dollar index. Did we stretch on this thing? But now we're back. Stretched further than what I would have thought. Much further. We actually got to the 61%. We're talking about this on the daily close, 96.56. And I didn't see it closing above the 90. I mean, we were moving higher. I thought, okay, we're going to come back to the 96.56. But we pushed even higher. We got all the way up here, almost to 97. We came back to close at what, 96.67. Now we're below this key 96.56 daily close. And one of the things that I was pointing at yesterday that I believe is that obviously we pushed much higher here. Look at this, all the way up to the 61%. To me, I believe the pivot for tomorrow is going to be 96.47. Matter of fact, right there. I believe that's going to be the pivot for tomorrow. Now, if we get a good NFP, let's say we jump up back here. I don't know what's going to happen, between now and then with all the volatility we've seen. And certainly, one thing that's going to weigh on the dollar, I believe, is the reaction that we saw here in the dollar yen. One of the things that we've been talking about, and I think I had a little bit of talk with Dale yesterday on Face is, so many people have been running into those U.S. equities. I'm surprised over the last month we've seen the dollar sustain these levels despite the continued fall off in the S&Ps, because then you're going to have less desire for U.S. assets. And but one of the things that helped it was the yields, this whole yield differential. Well, that yield differential is basically dissipated. It's gone for the most part, if you think about it, with what we've seen in where U.S. yields. Now, obviously, we've seen other yields, them also going and fall. But I'm just saying, we're not seeing that with the idea that it's going to continue to hold those levels or keep moving beyond whether the central banks are going to be doing. Everybody's even thinking how the Fed went overdone. They're going to try and ease back a bit if that's the case. But that being said, whether it's with rhetoric or whatever, but that being said is, I believe that the dollar is going to start looking as, at least in regards to the U.S. economy, as a glass now half empty. Now, I think, right or wrong, I think this has to spook the hell out of any dollar bulls. When you fall that fast, it's like, you know what, folks, there's a new sheriff in town. And I think that is going to change the perception. After what we saw with the yen, will change the perception we have here in the dollar. So my take is, once we get past, when we get in the NFP, we get below this 96.47. That's the pivot. And I'll tell you what, that's the way I'm going to be trading it. We get back below here and we start to get a move, then it's going to be the way, at least I'm going to look at it for the dollars. That's all she wrote. And now I think at least we have something concrete to hang our hat on, and that's going to be this. This dollar just got whacked. Absolutely 100% whacked. And I think that's going to go in and flip the bias on the dollar in the perception. And now I think that the issues like with the S&P and the potential that the Fed's going to end up paring back, and the idea that we may start to go into a bit of a slowdown will change the perception of the strength of the dollar. Not to mention what we've already seen in yields. And I think maybe we may be, in light of what happened here, we'll see what happens, but we could be on the precipice now of finally a good pullback in the dollar. It's one of the reasons that kept me in the euro when I was underwater. I said, I'm just going to wait. And normally I wouldn't have wanted to. It didn't feel good, but I was thinking, I'm just going to wait until we get past NFP. And I still have that other position. I'm actually long in that position, down 33 pips right now. No, 34 pips, 35. So, but I added on the way down, and boy, I tell you what, I was singing the blues. But one of the things I thought, no, I'm just going to wait until we get past NFP. That being said, had we got below, if we'd started to muster or move below this 113, I tell you what, I was going to be gone and knocked out. But that being said, I really think that now, in light of this happening, I think there's a new sheriff in town, and that's going to change the perceptions of the dollar. But we shall see. But that's going to be my take on here. So the resistance on the cash dollar index at this point is going to be right there, 96.70. Intraday, well, actually, we move it right here. You see here? Right there, 96.74. Support on a short-term basis today, right there, 96.19. Although this is going to be important, I believe. Well, we had 12.93, and we basically just hit this to the tick. And that's why yesterday, although we had, and we'll go into the gold now. Now, yesterday, although we had reached 12.87, my take was I think we can still push it to 12.93. And essentially that's where we came up right to the tick. It looks like we stopped at, well, 12.92, well, 12.92.27. So just a little bit of spit away, but the 12.93. And this is where I thought we'd get to this point before we back down. So that's why we'd made to 12.87, but I thought we could make one little push up here. But here's the thing is I think once we get past NFP, depending on what happens to the dollar, we can trigger past 13. But I mean, if you want to get a pause, we can probably see a little bit of a pause today, maybe a little pause to refresh, which might take us not that far lower. It might dip down to around 12.82-ish. Okay, maybe $6 lower. But that was my resistance for yesterday, and that's come through on this 12.93. Although I think as we come into NFP, I think that as we come into NFP, I think there's a chance we can trigger past this 113, especially as everything that's happened. Like I said, we've been talking about this for almost a month. I'm surprised that gold wasn't able to been gotten here a lot quicker in light of the volatility. Finally, we've done it, but this is 12.93 to 13.04. I think we can come up here. If you get this move up here, 13.06, then I would get the heck out of Dodge. If we get this move, you're still long on a Friday or Monday, they jump up there, then we'll probably see a little bit more of a pause. But like I said, we've hit that 12.93. We can probably back down to about 12.82-ish. We'll take a look. So resistance, well, there you go, right there, 12.83. Let's call it 12.83 on a short-term basis. We have a little bit more. Remember, we had from yesterday 12.79, but we were able to push up here almost to that 12.93 zone. So we'll go with 12.83. I don't want to go too much for hyperbole, but I'll tell you what, I'm just flabbergasted at the recovery here in the Aussie dollar. Wow, I can't even believe it. I mean, not that I didn't think it was overdone. We talked about if we had got a sustained move below 70 cents. I thought we could close this week below 70, but I thought, oh, we'll just take it out a little bit, spook everybody, get down to about 69.86, 69.75, and then next week with the U.S. China thing, we could pop and turn around and reverse around. Well, obviously the yen really messed everything, or really knocked things for a loop. But I said if we got a sustained close below 70 cents, next target was 68.36. Holy smokes, man! They went right through that like a knife through butter before we finally able to recover. But my goodness, look at this recovery back in the Aussie dollar. Holy smokes, keep a look at that now. If that ain't a hammer, I don't know what is. But something to keep an eye on. But wow, what a move. But anyway, let's get back. So let's go and take a look here at the 30-year bonds. Mm-hmm. Okay. Okay. So, boy, look at this move. Holy smokes. This was good resistance here, folks, at 46.28. And look at that. Well, we just blew right past this. It's unbelievable thinking how bad the bonds were, how they just kept falling and falling. I'm talking about in value, rates moving higher. Once again, now we have seen a corresponding move here in the boons. Not going to say we haven't, we have, but I mean, come on here, look at this. So what rate differential? You see what I'm saying? That once again, it's leading me to think is, like I said, the days of the dollar. I mean, I'm not going to say it's we're going to go to heck in a handbasket, but boy, I think we are going to see a nice little correction in the dollar as things are changing. I think yesterday is going to be the day where that's all she wrote for the dollar, this dollar move here that we've seen. When you look at these bonds here. And so you're going to start to find, look for reasons why the dollar can try and retain this value. That would be my thinking. And why I think that when you looking forward, the NFP might be the last hurrah, if it's going to be hurrah. And I wouldn't be surprised to see a decent little reversal. We shall see what happens, but you're starting to lose everything. These figures haven't been all that great. I'm talking about the economic. There's been some spates of good news, but now the U.S. equities have moved lower and lower and lower. So why would anyone need to buy the U.S. assets? Obviously, interest rates. Look at the complete reversal that we've seen here. And if this ain't a reversal, this is a reversal here now. We push beyond here. I just don't see what the dollar's going to hang its hat on. And like I said, I'm not a dollar bear, but I think we can get a pretty good resistance, a pretty good return back in the dollar. And one thing I'm jumping all over the place, but just trying to keep my thoughts here is one thing I think with all the hullabaloo that went, okay, we were able to stay above 113 here in the euro. And that's not a whole lot, but I tell you what, when you look at what happened with look, see, we with all the hullabaloo, look at that. We still maintained above 113. Look at the cable. Aussie. So this, I think we could turn around and come right back up. I don't know if we're going to. That's certainly not going to pull any levels where it would go to, but I think we could see this dollar really come under some pressure. And look how we're retreating back to our pivot. This, to me, this is going to be the pivot on NFP day. You get below that thing and you can start, garnering some momentum. And so I think that we can be in for a pretty good little pullback in the dollar. Let's go and jump back. So sorry about that. Just wanted to stay keep that thought is that once again, now look at this reversal we've seen here in the bond market. Okay, so anyways, where's resistance? Well, right here. I'm surprised we were able to get beyond that, but we have, which is going to be right there, 48.02, which is just above the market. Tell you what, I'll give it to the dollar, despite everything. All kinds of problems falling all over the place. Government shut down everything else. It's maintained its strength still. For the most part, we're not that far away from those highs, but I don't see it lasting. But we shall see. Let's go on and move into the 4-hour here, which is the only one that I look at on the 4 hours on the bonds. And it's going to be right there at 46.17. Moving into the buns. Another heck of a move here. See, look at the bonds. They've broken above here and they're still holding above here. Okay? Look at the buns. The day's not over, but look, they broke above and now they're back below the resistance. Now, this is a key breakout area, but I'm just saying is, once again, what yield differential? You see what I'm saying? We're just starting to, little by little, that the thing is just continuing to erode. And why I think that we can sustain a pretty decent little pullback here in the dollar. And we certainly have. I mean, I'm saying is, remember over the last couple of weeks, we've seen dollar bulls, leave themselves with these long positions. So now we've seen that pullback in the dollar. So it's made up of it. And once again, why I think that pivot is going to be very important tomorrow. Anyway, going back to here, resistance now. I think we're going to have to move into a shorter time. $64.34 for resistance. Support will be right there, 63.83 on a short-term basis. I think we had that yesterday at 5:45. We'll take a look. No, 5:26. 5:26 is where we had a resistance. I just don't expect a lot of movement ahead of NFP. We'll just put the support right there, 450. 450. I'm just amazed at the recovery in the Aussie dollar. And you can see now gold. We talked about this yesterday. I thought we would get to 1293 before we start to see a bit of a pullback, even though 1287 was a 61%. And we're able to go and do that. And you can see now with the gold market just easing back a bit. So 1283 is going to be support, but once again, depending on what happens with the dollar, I believe that we can clip above 1300. So we will see a little bit of a pullback, not a whole lot I expect, but that door is still open for the gold to move higher. There's the bias chart, and I'll go on and get that posted into the room. And thanks for joining us here on the European crossover.